year, whatever. And we will be sort of stepping on that again tonight and expanding on it in a different area, which all will become clear as I dive into it. Just let him fill in as well. So what I'm going to share my screen and yeah, start the presentation. Let's get that. I need to do this. Oh, one second. Right. 1 second. Should have had all this ready. Can everyone see my screen?
Yeah.
What, as in the slides?
Oh.
No.
No. Okay, right, 1 second. Right, take 2. Here we go. Right, can you see my slides now?
Yeah.
Okay, magic.
Yep.
Happy days. Happy days. Right, so. Right, we are going to get to the end of the finance session by the end of this webinar. So basically, we're going to go from page 251 all the way up to 330. So that's like the most of the book done then. So we're on track to like graduating or what have you. Did everyone get the recording from last session? Did you get that emailed across out? If not, I can give you the recording. Yeah, or I'll put it on the Facebook group, or even email, or I can upload it to YouTube, then send you out the link on that as well, which is absolutely fine to do. Right, we are going to focus on numbers, and as you all know, I'm an accountant, so this is like I'm in my zone. I'm in my zone when I sort of like when I'm presenting this element of the plumbing and heating business. So by the end of it, hopefully you'll get a real grip of your numbers and what you need to understand to really drive your plumbing and heating business forward. So you'll gain control, financial control, and hopefully you can understand any reports you get from your accountant a lot better. I know there's a few people here will get like a lot of reports off me when we do your year-end accounts or back returns or what have you. So it's my job as your accountant to make sure that you understand the figures and you can then interpret the figures to then, I suppose, utilize what the information's in there to help your business grow or develop. So yeah, basically repeating it again, you're going to get a real understanding of the finance section, the department of your business, and what I suppose the responsibilities are of the finance department. We'll talk about a bit of software as well. Probably Xero. Yeah, you all know I'm a big Xero fan. Yeah. Right, so let's go into this. Okay, right. So the financial statements. So there's 3 main reports which you get to analyze your business. So we'll start off with the first one. The first one is the profit and loss account. It's exactly what it says in the tin. It shows you what your profit and what your loss is. But if we go back to the 9 drivers of profit, we all know that profit derives from other factors. It comes from like your turnover less your cost is your profit. So that it's an equation, and you'll see that on your profit loss account. It shows your bread and butter, so how much money you've made or not made in a given period. We tend to break it down monthly, if you get monthly management accounts, or quarterly in line with your VAT returns, or if you're not VAT registered and you're a limited company, then it's going to be like yearly with your year-end set of accounts. If you are a sole trader, then we've got Making Tax Digital for self-assessment coming in April. So you'll be getting. Well, we need to file accounts to HMRC every quarter, starting in April 2026. Now your balance sheet. So this is basically it's a snapshot of your business, and what it shows is all of your assets, so things which you own within your business, and also your liabilities, so things which you owe. And then what's left is equity. So equity is what is equity is it's hard to explain, but basically equity is what's left in the business. So if you've got more assets than liabilities, your equity is going to be positive. If you've got more liabilities than assets, then you're going to have negative equity. So that's how it works. And obviously, if you've got more liabilities than assets, you'll be owing more to creditors, overdraft, credit card, bounce back loans, funding circle, like whoever that may be. But yeah, we don't want to. We want there to be positive equity. Yeah, we want your businesses to be solvent. And then the third document we've got is your cash flow statement. Now this shows all the money coming in and all the money going out of your business in a given period of time. And what it comes back to is the balance in your bank or bank accounts. If you use profit first principles, you might have multiple bank accounts. So yeah, so it's three different reports, and they paint different pictures of your business, very different pictures of your business, and they all reflect and dictate on the others. So, for example, if you've got for your profit and loss account, if your business has high profits and you're making lots of money, your balance sheet, as long as you're not taking everything out, should be propped up, should be quite high. Because ultimately, your bank balance is going to be high, and the bank balance within your business is an asset. But on the flip side, if you're making a loss within your business, that loss has to come from somewhere. It needs to be financed somewhere. And now that loss is usually financed from your trade creditors. You haven't paid your trade creditors, or HMRC, you haven't paid HMRC, or you're having to borrow money in order to prop up your business to finance it. And then what goes on between these two documents is fully illustrated within your cash flow statement. So there's a number of ways to look at your cash flow statement. If your business is under £10 million, we don't actually need to file a cash flow statement to HMRC or Companies House, but it's the cash flow statement is a brilliant document for your internal records. So I've got businesses who turn over like quite a few £1 million in turnover, and they need to know what the next 30 days for their business is going to look like, or the next week, or the next 2 weeks, or even like the further we go down the line, the harder it is to predict. But certainly we know we can estimate when your customer's going to pay, and we know when you're going to pay your suppliers because you've all got your own credit terms, and we know when HMRC are going to be due. So there is a lot of fact we can put into these forecasts and budgets to predict the future. But ultimately, anything could happen. But like I said, we do our best guess to sort of like predict these things. And with that information, you can then act upon it. You know that if you've got a shortfall in cash in the next month or two, you might have to dip into your overdraft. Or you might be on the phone to the bank of mum and dad. Do you know what I mean? Or just whatever. Yeah, to finance like shortfalls, and likewise to finance to know that there's going to be money in the bank to pay for your VAT bills and stuff like that. So it's always good to sort of like keep your finger in the pulse. Simple strategy I do with businesses is to look at your current financial position by looking at three different things. So the first one is looking at your debtors, the money which your customers owe you. Then we look at your creditors, so the money which you owe out. That could be like trade creditors, HMRC or whatever, and then your bank balance. So with these three things, we can predict what your bank balance is going to be in the future, and it is really helpful and useful. Does that all make sense? Does anyone got any questions on these three reports, or pick my brains over anything?
I've just opened Zero to have a look and I can't see cash flow statement in Zero under the reports.
Okay. You have the middle, the comprehensive version. So, I'm gonna say I'm
Yeah,
not going to share my screen. Um, yeah. Okay. So if
would it
you,
just be cash summary?
yeah, cash flow manager. Yeah. Yeah. So click on reporting
Ah,
and then
yeah.
cash flow manager. Yeah, should be there.
Excellent. Thanks for that.
Yeah, you got it. Yeah, okay. Okay. Good stuff. Good stuff. Yeah. All right. Where are we? So.
I'm not sure how everybody else feels, but I always struggled with trying to predict what money was going to be coming in over the next quarter. I knew that, Q4 and Q1 were going to be busier and Q2 and Q3 were going to be quieter. But that's as far as it went. I think it was more of a case of what capacity have we got to make money. But that was not a very good calculation, because just because you've got the capacity doesn't necessarily mean that the work's going to come in. But what it does do is predict what your top end is, because you can't work more than what you can work. So I'm just curious how some of the more established businesses go around that.
Yeah, contracts. If you've got contracts, if you're invoicing out, I don't know, say the end of December, and you know that the contract's going to pay by the end of January, you can predict the money which is going to come in. Yeah. So same as if you offer, like, same as if you're doing boiler installations, you get a deposit. You know when the lads are going to finish that installation, so you know that the other half of, or whatever, the remaining balance is going to come in. So you just use it like that. You look at your customers, and you also look at you can look at the percentage of money which you tend to get in. Right. So let's say, for example, if you don't get money up front, but what you do is you do a service for a customer. You might do 100 services in a month. Look at the previous month, and you know that historically 80% pay within that month or pay on time. 20% might kick their heels and might pay 3, 4, 5 weeks after. So you look at your debtors and say, right, out of this batch here, I'm going to get an 80% of that. But this customer always pays on time, so I'm definitely going to get that. So therefore, that goes on your cash flow. And you also, like, have a margin of safety. Have like a worst case scenario, yeah. But generally, you should if first of all, if you're working for someone and they're not paying you, like, just got to put them on stop. So it's as simple as that. It's like, you know, I'm not working for you. So you sort of like cut ties with bad customers if you want. So as a business, what you should be working with is just customers that pay you on time, and or per your terms. And if they stick to those terms, you can predict when the money's going to come in. Yeah.
Just a question for everyone else. Is anybody doing cash flow, or is everybody doing cash flow forecasting and predicting what they're going to have for the suppliers? Or are you, just like Tommy said, trying to earn as much as you can to make sure there's money in the bank to pay the suppliers?
Yeah, version 2 for me.
Yeah, same.
Ian, I'll comment. Obviously, the new business is way more predictable than what the old business was. And yeah, I have the cash flow. I know I don't look more than 6 months ahead, but I'm pretty bang on. That's what is going to come in. And I'm now, as we're going through this, like, remembering what it was back in the day when, when you've got a team of lads to pay for, and all the other overheads that go with it. And it literally was fucking open for a cold winter, if you don't mind me just putting it like that. And that's what it was. And looking back, I took my chances, and I guess we need to try to figure out how to not be so risky. And I think those people that are taking on moving into heat pumps, I think that's answering it, because the heat pump work is more steady in summer months.
It is.
Memberships and care plans are probably a good thing to push as well, I guess.
Yeah.
But 30 days is, or like the following month, end of the following next month, is the sweet spot. Anything predicting past that period of time it becomes less accurate, because
Yeah.
it's just so hard to do. Yeah. I
Well,
mean, I often get banks that say, I want a year's cash flow statement for permanent heating business. I'm like, yeah, no problem. But I have a word with the director, say, this is all bullshit. Like, we cannot predict a year's worth of cash flow for your business, because it's so reactive. Yeah.
Mm.
Yeah. So like, don't get me wrong, we're putting reports together to satisfy what they need, but it's not going to happen. It's not going to be reality. Yeah.
so I know that just over years, we have the way that our financial year runs. We pay our corporation tax at the end of August, and so that going into the summer, it gets quiet. You're still paying the wages. There's a downturn in business. Then there's the holidays. Then you pay your corporation tax. Then we're hit with VAT the following month, and that going into September, you're just like that, like Tommy's saying, just hoping for a cold winter, because you're scraping at the bottom of the barrel. You're looking rosy going into the summer, and then a few slack months and a load of high bills. It all changes.
Ian, profit first, mate. That's what.
Mm.
So if you look at page 309 of the book, we talk about money management. Yeah, so that's what it covers. We're basically saying you need to divvy up your business. You need to account for your corporation tax, whether it's between 19 and 25%. The money's not your money. Yeah, you need to do the same for VAT. Set aside, it could be anything between 15 and 10% of your revenue, which comes into your business, is set aside into a VAT pot. So
Yeah,
let's say in a month you're getting 20 grand, you're putting aside 10 to 15% of that into a different bank. It's not your money. And then that hopefully will mean that when your VAT bills do come, you've got the money there. Yeah. But page 309 will really, yeah.
Well, we do it now with we bank with Starling, and Starling has saving spaces, so we allocate a daily amount to our saving spaces in Starling. That's changed everything in that respect. But
Yeah.
you're looking at just a current account which is just full of cash, and you're like, that fantastic, and then you realise you've got all your liabilities, so we try and squirrel it away into the saving spaces now.
Yeah. Right. I love styling, don't be wrong, because of the parts. I love it. But what you're missing out on to me is bank interest received. So I'll get onto that later.
Right.
I'll get onto like leverage later. Yeah. Yeah.
Right, I'll shut up. Carry
No,
on.
no, guys. This is an intimate group, right? So I'm like, the more questions, the better. Ultimately, I'm here to make sure that the information in my head or the book gets to you guys. So no, like I welcome questions. Totally welcome questions. Yeah.
Right.
So Aaron, when it comes to predicting, like for us now, if we're predicting the last 3 months, hence I'm drinking 2 cups of coffee when we first come on, because I've literally just walked in, because we're still busy. But we cannot predict our next 3 months, go on the last 3 months, because I think it's what come back to what Ian said, that the summer and the winter are just two different. It's like just two different businesses, really.
Yeah. So pivot your business as much as possible. What I mean by that is in the summer, you're concentrating on bathrooms, you're concentrating on fitting people's barbecues or whatever, or your CP12s for letting agents. Shift as much as your non-reactive work into the summer, if possible. Put on promotions for bathrooms, put on like promotions for heat pumps. As much work you can do in the summer, you need to be doing it to iron out the peaks and troughs. But then again, also the summer's time to chill. Like, it can be time to chill and recharge the batteries. So
when it was just me and Tyler, we used to enjoy the summers, because it's like, oh, we've got half a week's work this week. We'll have a couple of days off, sat in the sun.
yeah.
But
now he's got me.
Now we got Kelly to pay for.
Yeah.
So,
but cash cow throughout the colder periods. Yeah. Bank the money. Don't take it all out of the business. Like use your pots. So what we'll do later, we'll do the break-even analysis, and in that we'll put in a seasonal pot, if you like, or season variation. So you've got X amount saved to see you through the 7 months, to make sure you can pay for Kelly, to make sure like your vehicles are being paid for. So yeah, there is ways. It's just being financially savvy with your money. Yeah.
Thank you.
Yeah, instead of feast and famine, take the feast and famine, but instead of going like that, you with your bank, you just iron it out. So you're not taking loads of money out when it's the feast, and so therefore you've got money for when it's the famine. Yeah. Iron it out. Yeah, and contracts and recurring revenue is very important and very like mentally rewarding for a plumbing heating business, knowing that every month you've got X amount coming in. Yeah, I mean, which is why I'm actually a big advocate of like getting into bed with letting agents. Yeah, because if you can get in bed with a letting agent, and it might be crappy, cheap work where they take a good cut. Actually, it keeps the lights on during the summer. It keeps the business busy during the summer. Yeah.
Yeah, we got one good one.
Okay. Good.
So could just do with a few more of them.
But it takes time. So you're more about systemization. So work out what you do well for this letting agent who you look after, yeah, and then create some marketing material to target more letting agents based on what you do for these to give them a good job and to make them stay as a customer.
Yeah.
Systemize it. You like really double down on what you do to then redo it. Yeah. I
Thank
know it's
you.
easier said than done, but if you just have in your head how, like, the concept of how to do it, I'm sure you can. Yeah.
Yeah.
I can do it. Yeah. Okay. All right. Sound. Right. Okay. So let's talk about cost then. So we obviously spoke about the 9 drivers of profit. So two of the 9 drivers of profit are costs. We've got variable costs and fixed costs. Variable costs are stuff which which vary based on output. So, for example, salaries, buying materials for the job. These are your biggest costs in your business. We've also got like fixed costs. So these are your monthly overheads. So things like subscriptions, accountancy fees. Oh God, there's loads. Bank charges, like internet costs, like you name it. Your fixed monthly costs. They don't tend to change that much month on month. But the point is, if we can keep your costs down, so by keeping costs down, your margins stay consistent. But you can also, but if your costs go up, you need to increase your turnover or profit, or to sort of like counteract the increase in your costs. So look, a quick example. If the cost of a boiler goes up from £1,000 to £1,200, you need to pass that cost on to your customer. If not, you're losing your margin. So same as if you're looking at your telephone bill or your subscriptions to gas safe are going up, or when you register heat pumps to rec or whatever, if these costs are creeping up, make sure that your turnover keeps up with it as well. Therefore, your margin will stay the same. So you know more about SOPs. So one of the SOPs we've got in the book is a traffic light system. So simple way to keep an eye on your costs. Print off some bank statements and get some free highlighters. So 3 different pens, green, amber, and red. So highlight all your costs that you need within your business. Highlight them green, so i.e. you need to pay these costs. So your merchants, telephone bills, vehicle insurance, like whatever it is in your business, you need to have to keep the lights on, to keep your business running. And then also look for your bank statements and highlight anything which is like amber. Now these are things which you potentially, you are paying for it, but do you need it? So for example, you might have some old subscriptions which you're paying for. I mean, in the book, I mentioned one about a telephone. Have you got like an old contract for an old employee who's no longer using that telephone? So therefore, you'd highlight it amber, and you'll go away and you'd challenge that expense, or you try and cancel it, or you'll shop around for an alternative. Now, other ones we've got is red. So this is like going through your bank statements and highlighting anything which red is like you don't need that as a business. You can't justify it, so therefore just remove it and cut it. Now, this exercise just sort of like, we all get complacent, but we all will see the next shining object and think I want that, or sign up to a new bit of kit and think I need that, and then after a couple of months you realise you're no longer using it, but you're still paying for the subscription. That is a cost to your business, and therefore it's killing your margins. So this simple exercise, turn it into an SOP. That put a reminder in your calendar to make sure every 3 months you print off your bank statements, or every month, or or even in the summer when you've got nothing to do, because there's no boiler breakdowns. Have the SOP so that you know that you to go through your bank statements and be brutal with your business. Chop off whatever you don't need. Challenge anything which you do pay for, but there might be a cheaper alternative or a better alternative out there. And then green as you need it. Yeah. So yeah, is that sort of some good tip, good advice for everyone?
Yeah.
Yep.
Yeah. Okay. And then does anyone do that? Does anyone like every so often batten down the hatches, look at your bank statements, think, fucking hell, I'm making no money, I need to do something about it? Does anyone go through this process?
I have done it a few times, yeah, but yeah, it needs to be more regular.
Yeah. So to make it regular, turn it into a system, turn it into put in your calendar, remind you in the summer, bang, I'm taking half a day off to cut costs. And if that half a day no, it's not even half a day, it's a couple of hours, do you know what I mean? That will pay for itself. Yeah. I often go through a panic with a lot of clients, and like, Aaron, I need to cut costs. And all right, give us your bank statements, come on, let's just go through them. Do you know what I mean? So yeah, plan this into like a yearly, or at least a year. Yeah, yeah, okay, right. Break even. Right. I'm hoping you all know what break even means. It's the point in your business where you're not making a profit and you're not making a loss. You're breaking even. So your turnover equals your expenditure. Now, don't get me wrong. We don't go into business to break even. The aim of going into business is to fucking beat break even. But the way we do that is we have to factor it into our pricing, into how your business operates and sells. So let me just go into some more definitions, I suppose, of break even and how it's really good for your business. So it helps with the financial viability of your business. Like I said, no one goes into business to break even. If you're pricing your jobs and you're just wiping your ass, it's not good. Yeah, you're not going to be in business for long, because all that's going to happen is the van's going to break down and bang, you can't afford it. Your liabilities are going to be more than your assets, and you go into negative equity, and you can't. It's hard to sustain a business where, I suppose, you're constantly chasing your tail, or you're constantly in debt. You therefore have interest payments, bank charges, because fees are being, because transactions are being bounced. It's a downward spiral. That's not what we want. When all we have to do is know what your break even is and make sure that we're on a positive spiral to improve your business. Now, knowing your breaking even point means is good, for we can assess different pricing strategies. You know how to price a job and how not to price a job. Like, guys, you'll get it. You will probably go to someone and you're the second person to quote for a boiler, and they've said to you, oh, someone said to me 2 grand, and you look at it and think, I'm not doing that job for 2 grand. It's like, good luck. Do you know what I mean? Like that is you knowing your business's costs, and I suppose being true to yourself and saying no to stuff. Like, I mean, I do it when I quote for some people's work and look at what they're paying their previous accountant, and I'm like, I can't do it for that. Do you know what I mean? Like, so I'm sure you'll get it in your own business as well. Knowing your break even means you can have like sales targets. So you know that in a given month you need to do X amount to survive, to beat break even. So it helps with your output. You know what your minimum trade level needs to be. You know that if you like, as a business, you need to be doing 30 grand in a month. If you're doing less than that, you're making a loss. If you're doing more than that, happy days. Yeah. So knowing your break even point and output helps you know what you need to bring in each month. It helps you manage your costs, control your costs, and also profitability. So the way we look at break even is we basically look at the costs within your business, and we link it back to capacity. So in the last session, we spoke about capacity and how to calculate that. So does anyone want to volunteer and be my guinea pig? I'm going to share my screen and I'll go through a break even calculations with you. If not, I can just make up some figures. Yeah, you don't. It doesn't have to be to the pound. I can just make some up if you want then. So okay, I'll just make some up. I put some figures. Right. So. Can everyone see an Excel spreadsheet?
Hmm.
Yeah. So basically, what we're going to do is we're going to get some load of costs in for a business, and at the end of it, it's going to show us the different break-even points of this hypothetical business. So the first thing we're going to do is we're going to look at the engineers. So you'll remember in last meeting we spoke about capacity. We're just looking at the engineers' capacity, or your subcontractors' capacity. What hours can they do in a week, a month, a year? Because with that you can then go away and find the work and then price the work accordingly to make sure that your business is covered operationally or financially. So because we've got a fake business, we're going to call it Tester, and we're going to say that this business has four employees, and who are full-time, and then one part-time employee. The business does actually also use like subcontractors, but they just tend to have one who tends to work full-time. They do have apprentices, but the thing is, because we're looking at the break-even cost of your business, when it comes to apprentices are a pure cost to your business. Unless they're going out there and making money for your business, they're not something which we need to make money on. They're the complete opposite. They cost you money. An apprentice will put a foot through the fucking floor. They'll whatever. They'll stand on the washing machine, like stand on the washing machine door to go over the sink. Whatever. They cost you money. So we're not going to factor in the cost of apprentices to calculate break even. As in their capacity, we're not going to factor it in. We will factor in their cost, but we won't factor in their output. Right. So we're then going to look at the business's cost. So because this business has got like 4.5 employees, it's probably going to cost them, their wage bill is probably about 200 grand a year. This is engineers' wage bills, by the way. They've got a Kelly, they've got an admin person. Yeah. So we'll put in a figure for the admin person. Maybe put in some national insurance as well. Employers, national insurance. And then what I'll do, I'll just put in like a massive other cost. So the other cost is basically going to cover all of these. So it'll cover like advertising, accounting fees, bank charges, consultancy, training, recruitment, you name it. It's probably about 7 grand a month. Yeah, so we're putting 84 grand there. So to run this business, it costs them 329 grand a year. Bearing in mind, this is purely cost. It's purely engineers' costs and the operational cost of the business. It does not cover the cost of materials, because when you're buying materials, say again a boiler for £1,000, you need to be selling that materials for 1,200 quid. Therefore, the cost of your materials should already be break even. So we don't. I'm not considering the profit you make on your materials in this calculation. Right, and then based on that, we can literally go to the next stage. So we know the total cost of the business in a year is 329 grand, which works out to be like say 27.5 grand each month. Now always factor in a safety margin. So in this instance, we've got 10%. So we know that if costs were to increase by 10, all these costs were to increase by 10%, doesn't matter, we've factored it in. The thing is about break even, you use break even to go away and price your jobs or have a price list on your business, so you know that your service is X amount, your CP12 is X amount, your call out is this price. You don't want to be changing that every flipping month because you don't want to be. It's a ball ache. So we put in a safety margin to account for fluctuation, a van breaking down, whatever, you need to get a new whatever. Yeah, so we factor that in. Now, so with that, we know the business needs to turn over 361 grand, yeah, in order to break even. Now, based on the previous engineers and subcontractors, the business has got a total of 6 equivalent of full-time engineers. Yeah, so 6 people. We've got 4 full-times, one part-timer, so 4.5 people. We've also got a full-time subcontractor. So basically, so I stand corrected. They've actually got 5.5 equivalent of people working in their business. And what they tend to do, they tend to work 40 hours in a week. So 5 hours a day, 5 days a week, 40 hours in a week. Now, and they also tend to work 46 of the 52 weeks in a year. So we're factoring in that we're still going to be paying the lads' salaries for 52 weeks of the year, because the total cost is up here absorbed, but we know that we can only put them out to work for 46 weeks of the year. Does that make sense? Yeah, I've got lots of nods. Yeah. Right. Okay. I'm glad it makes sense. I can explain it another way, because sometimes people are like basically this accounts for people's holidays and time off. Now you might say that actually, a lot of our lads actually work 45 weeks in a year because they tend to have a day's training every so often. Factor it in. The cost is still there within your business. You've still got the cost, which you need to recover on. So let's stick to 45. So going back to so basically based on these calculations, 5.5 employees working 40 hours a week over 45 weeks in a year. The total man hours per engineer is 1,800 in a year, but across the entire workforce is 9,900 hours across the whole workforce. That's what you can. That's your capacity. That's what you can. That's the time you've got to bill out, and then for the engineers to do what they need to do. And lo and behold, it comes out at a break-even rate of £40 per hour. Now, like I've said, no one goes into a business to break even. We've got a nice 10% safety margin in there, but we also now need to factor in you guys, what you want out of the business, how much profit do you want out of the business. Now, this could be anything for anyone. But in the first session we spoke about your dreams. What's the goal? Why are you in business? Yeah. So have your desired amount of what you want out of the business. So I'm just going to put in 80 grand for this business. Now, because we're solely looking at, because here all we've looked at is the expense within the business. We've also got other costs within your business which won't be reflectant on the profit and loss account. It's coming to that mix of how the profit and loss account and the balance sheet works. So, for example, you might have loans going out of your business, so that's a liability. You might have your bounce back loan which is almost finished, or you might have like your vehicle HP going out. It might be like £1,000 each month, but all that's hitting the profit and loss account is the interest or is the interest on the loan or the hire purchase on the loan. So all we're going to see within this side of the expense is maybe 200 quid. But as a business, you need more cash than that to finance your loans, to finance the debt. So because of that, we need to put in annual loan repayments. Now, let's just put in, say, 15 grand. I say annual loans, but it's basically everything. It's like your vehicle finance, it's funding circle, it's whatever you've got within your business. We need to make sure that we've got enough money in the business to satisfy what the business owner wants, and also to service all the debts you've got, if any. Now, we spoke about this before, but we literally said about seasonal variations and how you can control the dips within your business. You control the dips within your business by allowing for it. So this business, we've got a 10% safety margin already, which is good, but they also want to create a buffer within the winter months to survive the summer months. So what they actually need is a 2-month buffer of the business. So we're just going to call it like 54 grand. Yeah, 2 months buffer to help with seasonality. So we're going to put in 54 grand there. So this business, in order to get to the desired results of what the business owner wants and to service its debts and to make sure it's allowed for seasonal variations, needs to turn over £511,000. How that breaks down in per engineer is like this. Now, we have some engineers will go out and earn and work the whole 8 hours, and therefore it's easy for you to charge them out on a day rate. You know that this engineer is going to do a boiler installation, and you need to be earning £450 per day off that engineer to get to your desired results for the business. But not all engineers do that. We've got your jobbing engineers, your service engineers that might do, say, 6 jobs in a day, in which case you need to be charging them more to make sure you're getting the 400. So basically the £440 you need from a service engineer needs to be recovered over, say, 6 jobs in a day for a service engineer, i.e. 73 quid. Or if you're in more rural locations where a service engineer could probably only get out to 4 jobs in a day, you're looking at charging them out £110 per hour. Yeah, bear in mind all this is plus VAT. I know I spoke a bit quick then, but how was that? How does that sound?
It's good.
Yeah, makes sense.
Yeah, good, makes sense. Okay, that's the main thing. And don't get me wrong, we can tweak it, totally tweak it. You bounce back loan, or your loans might be paid off, in which case the figures come down.
Can I just ask if everyone on the call, are you fluent with Excel? I asked that without meaning to offend anybody, but I've come across quite a few heating engineers that said I can't use Excel, so they can't put together sheets like this.
No, I'm useless on Excel.
Yeah.
Okay.
Yeah, I mean,
I'm not.
Right.
So Aaron, are these ready-made templates ready to be shared?
Yes, for you. Right. So basically, in the book, right, I put right at the end. I know it's a fucking mammoth book. I know it's a big book, but I do put right at the end. If you leave me a review, I'll give you this spreadsheet. So the offer's still there. Like all you got to do is leave a review on the book, and you get a spreadsheet. There's a few people here who will get it anyway. Like Ian and Darren are like, I'll send this to you, but I would like to have a review of you. Yeah, and
Okay.
Tommy, yeah, Johnny, yeah, like that is on my next slide. That you will get this spreadsheet, and then when you do get this spreadsheet, there is some instructions on how to use it. But all you need to do is remember, don't fill in the greys, fill in the yellows, and then you can adjust it for your business. Yeah, you can totally adjust it for your business.
As you like sort of take on more engineers, then does that mean that you sort of become more efficient? Is there like a sweet spot? Do you know what I mean?
Right, let's do it. Let's do it. So we've said that this business has got 4.5 engineers. So let's whack on some more. So let's do a couple more full timers. So it's now got 7.5 full timers. But bearing in mind, because you've taken on 7.5 more, so more, yeah, 3 more engineers, this cost up here is going to go up. So it's probably going to go up.
Then you got cost of
Yeah.
cost of management. You know, who's going to manage it? Cost of surveying, cost of the unit.
Vans. Yeah.
Mm.
Yeah, because you know, once you're up to a team of 7, you're probably not going to be running it from your house.
Mm.
Yeah. So, but
So
that's the beauty of the spreadsheet.
yeah,
You can predict the future. Say, look, if I've got 7 engineers, and this is the average salary, what's it going to look like? What do I need to bring in as a business? And so going back to like the uses for this break-even spreadsheet, you can predict your business's future. Like if you now know that you need to bring in 600 grand each year, what do you need to spend on marketing and advertising to achieve that? How many leads do you need to get in? How many quotes do you need to be doing? What's your quote conversion rates? Like it's a different beast. It's a completely different beast. But it just it's all well and good me saying right, your break even point is now 600 grand. Yeah, like that works if you know you've got 300 grand contract off a letting agent or £1 million contract off the local council. Now you can start really predicting your business. Yeah. But yeah, but I'll give you all the so if you do leave a review of the book, just send me a link to the review and I'll ping you over the copy of this. Yeah. Or Sophia's, I think Sophia's emailed you all this morning. Yeah. All good? Does anyone want to put in any of their figures or do we check out
Yeah,
any of the
just a quick question, because you'll see this between the sort of the one man bands all the way through to the bigger companies. At what point is there a sort of sweet spot where it becomes more profitable? Because I've always found that we've been relatively small, and I feel like there's not the economy of scale. There's just all the things that Tommy's talking about, that managing people, going out quoting, and all the rest of it. That I spend most of my time not working out on the tools, and so I'm a huge cost to the business. But there's got to be a sweet spot when you've got enough people earning money.
there's no I don't see it as a sweet spot. I see it as down to like lifestyle. Like I look after Plumber Heating Businesses who's a one man band and he does well for himself.
Yeah,
He'll earn like 6 figures, and he's happy with that. He's just happy with doing that. He gets his pick his child up from school, like he's happy with that. But then I've got other people that have got 5, 6, 7 engineers that aren't even making like that are just scraping by. So the sweet spot is how you design your business. Like how you charge for your work. Um, are you systemized? Are you optimized? Have you got your finger on the pulse? It's there's no sweet spot. But Ian, what I can say is look, I'll send you the break even. I'll send you a break even analysis so you can see how everyone compares in the industry. But what I do tend to find is that it tends to be the golden rule: one engineer, 100 grand. Yeah, so
yeah,
it's one engineer, turnover needs to be 100 grand for that engineer. And when I say turnover, I'm talking purely labour. So I'm not talking materials. So therefore, so you got 100 grand of labour income coming in. Say 50 grand is going for the salary, national insurance, pension, time off, because you know they're only working 45 or 46 weeks in a year. And then the rest is overhead recovery or overhead apportion. I probably you probably couldn't see this.
Sorry, so is that 100 grand gross profit
No,
per engineer?
100 grand labour turnover. Right. So let me just quickly do the maths on
Yeah.
this. So let's say an engineer is 450 a day. We times that by 56 times by 5. There you go, 100 grand.
Right.
Yeah. So that's why I'm coming back to like 100 grand tends to be the sweet spot of turnover you need per engineer to cover their salary, time off, pension, van, and to recover on the overhead of the business. So for example, your admin. But one thing I do need to say is you're probably looking at about £1,000 profit per engineer per month.
Yep.
Don't. Sorry, it can be more, but you don't think that it's fucking you earning 10 grand a month off an engineer each month. I don't see that. I do not see that.
Right.
No, it's literally 1, 2, or 3 grand profit per engineer each month. Yeah.
Okay.
Yeah. It's yeah. Does that resonate? Does that?
Yeah, no, it does, because I've
Yeah.
actually just been going through the profit earlier on, just reviewing the install work over the last few weeks. And yeah, there's 7 grand jobs and it's turning into 60 quid profit on a job. You go, how the fuck? But you know, on other jobs are turning over a profit. So, you know, swings and roundabouts. But
Yeah. Yeah. And yeah, I mean, I'm getting more extensions than at the minute, and I've got a basic. Tommy knows, but I've got a detailed line by line item of what they're doing for the extension. And I know on some of these things they're making money, but other things they're not. So you see that as the same as your business. You know that 60 grand job on that profit is poor, but it doesn't matter because you've got other jobs where you're going to be making a lot more. There'll be some jobs, yeah. So it's the balance and it's life, and unfortunately that is business. Yeah, yeah. But as long as the average overall for your business is at a level that you're happy with, don't sweat on the smaller jobs where you're making a small profit. It doesn't matter. Yeah. Yeah. Another thing is that like sometimes you'll see that you've just made a small profit on whatever job, but then the rebate comes in, or then I don't know, then something else comes in. Do you know what I mean? So you get other windfalls in other ways. So yeah, it's looking at your business holistically, all in one. Yeah, yeah. Sound right. Okay, that's. I know we spent a bit of time on that, but it's really important to like know your break even as a business owner. Right, so yeah, I've done the demo. Yeah, so again, so just to let you know, you can get that free. You can get this spreadsheet for free. Just do me a Google Amazon review. So I'll send the link to that. Yeah. Right. Okay. So now we know what you need to charge to break even, and also what you need to charge for your desired life, your desired lifestyle, and to make the business have equity, i.e., more assets than liabilities, so you're covering your loans and seasonality. You know what you need to charge. Now, with that, you can go away and make some price lists. So again, this is another document you should have within your business. You should, if to grow your business, you need to have people within your team who can confidently go out and price stuff. Now, we have two sides to this. We've got your regular work, which is standard work, which doesn't change. But then we've got your bigger works, maybe jobs over like 500 quid and upwards. That'll be your varied work. But when it comes to your standard work, you should have a price list within your business that everyone can see. So you know what your call out charges, you know what you charge for a routine service, be that oil, gas, or LPG, whatever. You like have all of your rates written down. Sorry, not even written down, just on a computer, yeah, where someone can access it. And so they know when you get a phone call, they get an inquiry, or even Tommy might back this up by your AI agent. If you've got an AI agent, have like and feed it your standard price list. This is the menu which you get in a restaurant. You know what you're going to get, you know what you're going to pay for. But then also at the back of the menu, they've got fillet steak by weight. Do you know what I mean, or something like that. That's your variable price list. So yeah, I would encourage everyone to have a price list, write it up, and make sure your team can see it, and date it as well. Date it. So you'd have a price list for January 2026. Yeah, and then you know when that price list gets updated, you then have the version on the next price list. So the next price might change for the summer because you're dropping your prices, because you can drop your prices because you've got your seasonality buffer in the bank already, so you can drop your prices for summer to get some more work in, to make sure that overall you're hitting your break-even turnover amount. What I'm trying to do is I'm trying to like help you to connect the dots, how different sections of this book all come together to form the whole of your business. Yeah, does that make sense? That'll great. Yeah, okay, good. Right, so we spoke about like having the menu prices for your standard stuff, but you should also be having like variable prices for your other works. So going out for a boiler quote, everyone should get a different price for their boiler quote. Everyone. But you'll know from my first book, I'm big on like giving people 3 different prices: the bronze, silver, gold. Yeah, I won't dive into that too much because I'm hoping everyone's read my first book. and they get it. I suppose that's the question. Who's actually offering a bronze, silver, gold package to their customers?
Yeah.
Yeah, how you finding it?
Yeah. Since I read your book, I've been doing it and it's worked a dream.
Okay. So what do you do it for? Boilers? Like what sort of services do you do it for? Like
Just boilers for me.
Okay. Ever thought about doing it for other services?
Not yet, no.
No? Okay.
I think we do boilers at the moment, but it was the conversation we had with you last week or the week before, whenever it was, saying about doing it with the services as well.
Yeah.
Because I think that's a good idea.
So did you go into ChatGPT?
Not yet.
Yeah, that's Kelly's job. Yeah.
Yeah. Okay. Go into ChatGPT. Tell them about your business. You want to offer a bronze, silver, gold for whatever service, routine service, literally whatever, and then tell it like come up with 3 different packages. Yeah. See what it comes up with. You'll be surprised. Yeah. AI is your friend. Yeah. So Tom, going back to offering like the bronze, silver, gold. So where's the sweet spot? What are people going for in regards to?
In the middle, isn't it? It's always silver usually. And I suppose I don't offer like a gold, silver, bronze, but like when people book for servicing on my website, it gives them optional extras. So it'll say, do you want us to service your gas fire? Do you want us to service your hot water cylinder? Yes, no. And the customer has got full control of the shopping experience.
Yeah.
So it's a similar theory, I guess.
Yeah. Good. Let a customer buy, don't sell to them. The way you let a customer buy is you give them the opportunity to buy different products, services, or offerings.
Yeah.
And how have you found? How have you found your profit margins since implementing this?
Yes, like it definitely makes a good difference.
Yeah. Yeah.
Just your efficiency goes up because you're on the job for not much more time, but you're bringing in all extra profit essentially. It's great.
I'll add to this that I've been in one of the worst parts of Sheffield, Pittsmore, Aaron.
Yeah.
No,
Yeah,
I've been in Pittsmore, and the lady chose top Worcester Bosch boiler, and then I've been up the posh end of town, door, Aaron.
Yeah.
Where you're looking at the house, and the guy just took the cheapest ideal 24 kilowatt.
Yeah.
So you know,
you
don't judge it based on the house or the car. These are the options that we've got, as long as they all do the job for, you know, it's not like you're trying to force them to buy something that is no good. Yeah, that 24 kilowatt will do that. that property. You know, that Worcester Bosch will do that property. You don't know what budget they've got, basically.
Yeah. But the point is, if you didn't offer it, they couldn't buy. The person in the posh area of Sheffield who went for the cheapest, if you maybe have offered him just the middle package, he might not have bought it for you off a customer. So you as a business have still got to sell.
Exactly.
But then likewise, the person in the I suppose who went for the premium, if you didn't offer the premium, you couldn't sell the premium. So Darren and Kelly, going back to like offering more, like all your services and giving like a bronze, silver, gold. ChatGPT, like I said, ChatGPT or AI is your friend. Yeah. So I talk about my own business. A different clients like buying a business, and they want me to appraise, look at the financial accounts of the business which they're going to buy. I was like, right, I need to write a really detailed quote about this. So I basically went onto Loom, recorded what I wanted to put into this quote, got the transcription from Loom, posted it into AI, and said to AI, please turn this into a quote, but I also need you to tell me what terms and conditions to add, what the parameters of the work I'm going to cover, and also what information I need in order to execute this job. The whole thing took me the whole 5 minutes, 5-10 minutes to produce. But every word I was like, oh my God, yes, it's bang on. So take it a step further. Like I've got a client who goes around, and whenever he quotes for a boiler, he records it in his phone, in his pocket, and he can and the sound recording, he takes a quick transcription, puts it into AI and says, turn this into a quote. His quotes are taking him 10 minutes, but they're flipping tailored because everything he's talking to the customer at the time is summarized in this voice recording and summarized by AI, and it's tailored. But then taking it a step further, so if I go to my next screen, if you've got your bronze, silver, gold offerings for your business, again, like if you're doing a tailored quote on AI, feed into AI, like this is my standard offerings, from the voice recording. Also add some more variations into the different packages, and what you've got is a detailed, tailored quote per customer, which is different every time. But it's also quick because you've got a system of how to do it.
Yeah, well, we Service Mate now has got his own AI built in, and the amount of times we've got a big list, like a bathroom, you've just got a massive list of items, and we like to quote one price, not like 30 individual prices. And click AI now, and it puts a perfect description in. It's like, oh, that sounds good. It's something I could never write. So
Yeah.
Or you haven't got the time to write it, or you feel like it's not needed. But now we can. There's no excuse for giving one-line quotes or like tiny bits of information now because the information's at our fingertips.
Yeah.
Powerful stuff. Right, so I suppose, yeah, everyone happy with all that? I like again, I know I've sort of thought quick.
Yeah.
Okay, all right, happy days. Right, let's talk about leverage within your business because we are focusing on the account side. So Ian, you mentioned this earlier about was it? Yeah, I think I said I'll come on to this. So you said you bank with Starling and you utilize your pots, which I'm all about having pots within your business. But there's ways to sort of leverage the way you're using pots in your business to give you more advantage. So let me explain. So first of all, if you quote for a boiler installation, let's just call it £4,000. You get a deposit off the customer, £2,000, and then the remaining £2,000 at the completion of the job. Now, in the book, I sort of go through a whole timeline of how money can work in your favour. But I'll quickly go through it now. So going back to this example of £2,000, you've got money in the bank. You've got your materials from merchants. You're not going to pay them until 60 days later, but you still got money in the bank. But then when you do have to pay your merchants, Wolseley, City Plumbing, like whoever, if you pay it on a credit card, what you can do is probably delay the time where the money comes out of your bank by up to another 30 days. Now I've got a capital on tap credit card and it tends to be an extra 14 days, not the 30 days, but some credit cards you do get an extra 30 days before the money leaves your physical main bank account, your starting account, your main current account. Now, because of that, you're sitting on a £2,000 deposit from a customer. Now, that £2,000 deposit, if you deposit into a hot interest bearing bank account, what you're doing is you're getting your money to work for you. You're earning interest. It might be pittance from your bank but you're still paying your suppliers and on time. But your money's just working for you a little bit better. Now, don't get me wrong, this isn't going to make you a millionaire, but if you do this from day one in your business, it's going to compound over the lifetime of your business. If you're doing this for 10, 20, 30 years, this small little tweak in your business is going to add up. It's going to add up over time. So it's like I said, this isn't like this is going to make you rich next year, Rodney, type of thing, but it definitely helps in your business. Now, another thing, like I said, we've got capital on tap. Now, I use capital on tap. Everything I spend on my business, I get a 1% cash back. So now it's another factor within your business which is working for you, working for your business. You got money in the bank because you use the pots and you're utilizing the deposit account. You're also now getting a 1% cash back on all your merchant trade accounts. Yeah, so it's like what has happened is that there's loads small little tweaks within your business to help with cash flow and to help squeeze that little margin out of what you do, and what you do is on a standard day, if you like. Yeah. Who here has a capital tap credit card?
Can you explain it a bit? What I don't quite understand.
Yeah, sorry. Okay, right. So a capital tap credit card is a credit card.
Okay.
Standard credit card. So let's say that you pay for all of your merchants' bills on your credit card. So at the end of January, you've had a £10,000 bill from City Plumbing.
Yeah.
You pay for that £10,000 from City Plumbing on your capital tap credit card.
Right. Yeah.
Right, straight away, you get a 1% cash back for everything which you spend on that card. So by paying your merchant £10,000, you earn £100.
Okay. So yeah, I do a similar thing with an Amex. So you get like Avios points or something like that. Similar.
Yeah. Literally, it works exactly the same.
Cool.
So taking this a step further, if you're VAT registered, if you're in a cash accounting version of VAT, when you pay your merchants on the credit card is when we claim back the VAT from your merchant, even though physically your credit card might not leave your main bank account until say 15 days, 30 days after you paid your merchant. So basically it might clear a few days later. Yeah. So yeah, that's
okay.
Yeah. And anyone else a fan of Capital on Tap or just Amex?
Yeah, we use Capital on Tap.
Yeah. So another tip: when you get your rewards for using Capital on Tap, don't put the money into your business bank account, because if you do, it then becomes taxable. So instead, transfer it to Amex. Not to Amex. Transfer it to Amazon. Then I don't see it. If I don't see it, I'm not accounting for it. Yeah, that's how it works. I mean, I've got clients that have their Christmas day free, that all their children's presents that haven't cost them anything because they just build up their Capital on Tap points and they spend it at Christmas. Yeah. Little things like that you need to squeeze your business and just get as much out of it as possible.
Yeah, we normally just get the vouchers for Christmas off ours.
Yeah.
A similar topic. So like our accounts with like our suppliers, you get like a cash back through them sometimes as well.
Yeah.
Like Wolseley did one and there was like, I don't know, like a £99 bonus in there. And I just put that straight into my personal account. Is that taxable then?
If you don't know about it, I don't know about it.
Okay.
Yeah. But as soon as you put it into a business bank account, the transaction's there.
Yeah.
And obviously, if you have any VAT returns and your year-end accounts, your accountant sees that. So that's what I'm saying. If it's in your business bank account, I see it. It's taxable. But I don't know about it. I don't like.
We do like most boiler manufacturers do cashback on it per boiler. Like Worcester is £50 a boiler. So that can add up across a year. But they can give you it straight onto a prepaid credit card. So I assume that's tax free.
Yeah. So So I'm in an erring. I mean, the correct way of accounting for it is taxable, but like I keep saying, if I don't know about it, then we don't know about it, and it's not something we particularly go digging around for.
The only reason I thought it was okay, I was watching that Martin Money supermarket guy, whatever it was recently, and he said something like that money is non-taxable. So I was like, happy days, check it straight into my account. But if you, yeah, I was a bit suspicious.
Sorry, so going back to the rebate. So if you buy t-shirts and stuff like that, and you get all your Worcester Bosch embodied t-shirts, then that's you're sort of utilizing the credit card for that. So it's like income and expenditure nets off against each other. So there's nothing gained, nothing lost. It's you're breaking even. You're breaking even on the transaction. But if you're physically getting the rebates paid into your business bank account, then it's taxable. Yeah, and there's also VAT on it as well. So the rebates I see going into banks, you'll get a remittance from Worcester, and it says cashback on it. Do you know what I mean? It says cashback. Do you know what I mean? And it's all vatable. So yeah, that is taxable. Yeah.
Okay.
But if I physically put it onto a credit card, and if as long as you net off the expenditure with business business items, then we can account for both ends, but it'll be having an effect on profit.
But
Dan
it's
said
not
a chat, no,
business
I've got a
stuff.
chat in a week. Yeah, I'll have a look into that. Yeah, right. Right, that is the end of my slide. So yeah, should we just open it up to more questions, I suppose, or does anyone want to run over anything?
I was going to comment on what you were saying earlier on. You know, are you going through ripping your business to bits financially? I did do it a number of times back in the day. I like the idea of just sitting down and thinking, well, is it always about slashing money? Because if you've done it a few times consistently, you've already slashed everything that there is to slash, really. But then it's a case of, well, you know, insurance is coming up next month. Can you take the time to try to make some, you know, save some money on the insurance? Or the next part of it is, well, how if we can't save any more money, how can we save time? Because time is money.
Yeah.
You know. But yeah, on the flip side is how am I going to slash things to save money? And on the other side is what can I do with my time to try to make more money?
Yeah.
Trying to get the balance right into it.
It's all balanced.
You know.
Yeah.
I think a lot of people get caught. You know, there might have been a couple of people there last week got caught with all the new shiny stuff about AI. You know, so rather than doing what they know needs to be done, they see the new shiny objects of AI and think, I'm going to go off and get all this software and start building my own software. You know, can't win, can we? You know.
Right, to give a bit of context around that, Tommy hosted.
Now Phil's laughing.
Yeah,
Phil.
He's synced on his camera. Yeah, so to give a bit of background to that, Tommy hosted a workshop last Friday in Sheffield, and it was about AI and how we can use it in your trades businesses. So I was there, Phil was there as well, and obviously Tommy. Yeah, and Etan, so from Help Me Fix, did a brilliant presentation on how you can use AI agents to build your business, to do everything within your business. And Tommy, I went down that rabbit hole, mate. I literally went home and got Claude. I've been using ChatGPT from day one because I thought, oh, it's the first product out, it's got to be the best. But then I got showed Claude, which is another AI, like large language model. Yeah, what about you, Phil? What rabbit hole have you gone down?
Oh, I've made a whole customer portal and a landlord portal. They can log in, see all their properties, download all the records, and I've been testing it the last 4 nights. It's crazy what you can do, but it's fried my brain.
So you've made that from scratch?
Yeah, I built an API that links ServiceMate, Stripe into a custom portal I built. And then the customer can log in, they'll see all the properties, download all the certificates, and then I made a separate one for the landlord so they can log in and see all the properties, see when they're all due, what's compliant and what's not, and download certificates.
That's
Phil?
brilliant.
Phil, talk to Vince because he's done something very, very similar.
Is it? Oh, cool.
And I'm sure there'll be something that one of you two's missed out of each other's plans and just figure out what that is and add it to yours. Yeah.
No, that's a good idea. I'll speak to him.
Phil, can I ask,
Yeah.
what did you make it on? Like, what platform?
So initially it was on Lovable, but then obviously you use the credits up quite fast. So then I put it into Claude. I migrated it all from Claude, from Lovable. So it's hosted on GitHub. It's linked to my domain, and then I use Supabase as all the backend, and then I have to link the API, and then from ServiceMate to that and test it. But it was hard, but it's getting there.
Right, just to sort of put some more context to it. When Etan showed us how these AI agents can do stuff, my head was like, oh my God, I can't.
Yeah.
Like we've gone from using ChatGPT to ask it questions to having something called AI agents where you ask it questions, but then you tell it to go away and do something.
Yeah.
So yeah, AI is coming on so fast, and it's one of them things, use it or get left behind.
What I'd like to see as we're on a, systems talk and particularly looking at finances is, Phil, not necessarily how to sell more service plans, but how can we use these new agent builders to look at the money,
Yeah.
And I think, well, surely we can give Claude permission to go and look at the finances. I'm not sure.
I thought of that earlier. I've got a suggestion. So, Claude suggested it can go for all the service mates, see like what's quoted and what's done, and it can take services, repairs, everything, and then it can work out what's your most profitable and what's your typical time on a job and what's your supposed to be time and everything like that. So you know where there's wasted time. That's a wee small bit.
I bet you it'll put it all together in a nice, pretty pie chart for you as well.
Probably.
Mm-hmm.
And is there something that you can embed into ServiceMate?
No, so ServiceMate allow you to register as a developer now.
Okay.
So you get given what's called an API.
Yeah.
So API, you know how when you type in like custom emails and automations, they have merge fields. So they use the merge fields, and you create a portal or a software or a website basically, and it can pull the merge fields from customers' data. I could send you some pictures of what I've been working on, but it blew my mind what's possible. But it is a lot of work. My missus says I'm like a mad scientist coming at my office. Like, look at this, look at this. And I've not slept in like days, but
Is it just the merge fields, the ServiceMate merge fields? So anything
it's similar, yeah. So
Yeah.
like the API have names for like companies and what they call each thing, like a badge. But you can have stuff happening in your portal and I'll update a client's details there. You can pull everything about a client and all their jobs from going back however many years. They can see when it was done, what engineer did it, if they wanted that. They can download certificates from years ago. Everything's there. You can link in your booking form for ServiceMate, but it's all in like a custom built customer portal.
Yeah. So I mean, just thinking because I've all been thinking because we've been trading for what 15 years now.
A lot of information there.
Well, there's tons of information, but I'd love to mine back into the previous customers that have dropped off, and maybe flag something up that why have they dropped off and develop some sort of offer to tease them back in.
Well, what I've built with it, so I've got an admin dashboard that I've built, and it's pulled all my services because I'm trying to create custom ones. Like you know how you get your 2 reminders of the services due.
Yeah.
I'm creating more so that when it's overdue, they get reminders, and then I'm pulling all that into almost like a tab on my dashboard. We can see what's due, what's overdue this month, who haven't picked up, and then I'll tally that and give it to my VA to go and call them.
Brilliant.
It's a lot of work, Ian, but the Claude, if you just put what you want, it'll tell you how to do it. I know with the co-work, it'll do it for you, but I've got a Windows PC and it doesn't do it yet. But if you put in what you want to do, what you want to achieve, and it'll tell you if it's possible or not, and it'll help you build it. But it is really impressive.
I know. So that's just Claude AI.
Yeah, but it's like a dealer package. I think it's the Max one because they've got a couple of different models, and it's the Opus. It's the cleverer model, and it's more expensive the more you use it. But
Right. Okay. Yeah. Just.
I can send you some pictures. I've got you on Facebook. I'll send you some pictures of what I've done and get you a good
Yeah, that'd be
idea.
great.
Yeah,
Nice one.
sure.
Cheers, Phil.
So, wait, so you actually get Claude to log into your service, mate, and do bits? Like,
So if you had a Mac PC, you could do this. Like, but
Yeah.
I don't have a Mac, so
Mac.
it just tells him what to do. I know Etan has his Claude do it, because remember he did it with setting up the custom service, mate.
yeah, because he's got a Mac, yeah.
Yeah, but I've got a Windows, so he
Yeah.
doesn't do it yet. But
Yeah.
He only ordered that Mac about 4 weeks ago, I think. Yeah.
For this feature.
No, it wasn't that one. No, it was he ordered it. I've got it on my desktop here. He ordered it for ChatGPT Atlas, which was only available on Mac, and it was like literally, right, I'm buying a Mac.
Yeah.
And then 4 weeks later, this is how fast all this AI is progressing. You know, because it's like a three-horse race, really, between the three powerhouses of AI. And each one of them like takes the lead 1 month, and then the month after someone else releases something else, and everyone's like, oh wow, it's this new thing. And then the third one comes in, it's a right race, and then it goes back to the other one. So trying to keep up with it is difficult, but what is possible now? So this Chat GPT Atlas, when this came out, okay, fair enough. I think it was before Christmas. This was now a browser where ChatGPT could look at everything that's happening across your different windows. And if you're logged into ServiceMate and logged into Zero, you're now giving it permission to go in via the browser. But what this Claude one is well, no, you can put it on your desktop. You can do that. Yeah, that's like so before Christmas. That's 2025. But now it can sit on your desktop and use all the files on your desktop. There's a question there of your finances. There is a question.
Yeah, data security. Yeah.
Mm.
Yeah. So I've
Yeah.
gone down a rabbit hole and told all my team to go on Udemy, which is like an online you could do online webinars. And I told all my team, we need to get good on AI. So I've had the visions of us going away and basically creating loads of agents and bots to do tasks. So that's the rabbit hole which I've gone down. Yeah.
I think it's scary when they say you can have an AI manager and the AI has AI minions, employees basically, and they'll talk to each other and report back to the manager who reports back to you. And you're like, what?
The thing is, I mean, this is it in a trades business. That'd be magic if you could just employ AI to do all the background stuff, and then we could just be sort of like front of house, like going out, meeting the customers, doing the job, earning the money, and letting the agents just do everything else in the background. That, to be honest, is just a drag on resources.
That's the way it's going, mate.
Yeah, I
For real.
welcome it.
No,
It is.
you need to go down this route because if other people are doing it, the cost of plumbing heating services or the admin, if you like, is going to drop because people's roles are going to be redundant because AI is going to be doing it.
One of my competitors put an advert out recently for an employee to utilize and exploit AI. So it's a full-time member of staff working in the business, just looking at ways to use AI to grow the business.
Yeah.
And paid somebody top dollar to do that. Obviously, the incentive is there.
Yeah, I've got clients that are utilizing AI voice to take their all their calls, because of that they're not hiring anymore in the call centers. Like it's just you have to adopt this.
Yeah.
And it comes back to 9 drivers of profit, getting down your fixed costs, get down your fixed costs.
I saw an advert for a bit of tech. You're talking about recording conversations when you go to do a quote. There's now a sort of necklace that you can wear that's just an AI recorder. There you go. Is that what it is?
Wow.
I got it in the post today, so see what happens.
What's that product called? Because I thought I saw that one advertised, but there's another one that's more like a sort of stone shaped. What's your one?
Claude with a P.
Claude. I'll have a look.
Yeah, it's interesting.
Aaron,
Yeah.
question on that interest-free, so the interest bank accounts. So
Yeah.
what do? Do you move what's going to get paid to the creditors into that interest-bearing account and then take it out again?
Well,
Yeah.
no, it's not it's not as good as that. It's literally just a savings account. So what I did is I took what was the yearly cost and then divvied it up by 365 and had that taken out the current account every day
Okay.
in a savings space. But it just means that there's always money there for the wages, the tax liabilities, the suppliers, and all that sort of stuff. And so what's sitting in the current account is sometimes it's arse clenching because you go, shit, I've got to do the invoice and I've got to pull in the money rather than just sitting thinking, oh, I've got 30, 40, 50 grand just sitting there. You
Yeah.
know, it's just a way to keep you sharp on the finances, but it should be working harder for us, as Aaron was saying.
So, Phil, what I do with mine at the end of each day, I look at my bank account, transfer all the money out, leave like 5 figures in, no, so leave 4 figures in there, to cover any direct debits which are going to come out. That all then goes into a savings account, which is accumulating interest. Then at the end of the month, I'll work out my profit and then work out what my VAT bill is going to be for that month. Transfer out the VAT money, then transfer out money for corporation tax. So yeah, but also at the end of the month, I'm transferring money back from the savings account back to my main account to pay for the wages. So don't get me wrong. It's like you got a pot, you got your bank here, you put your money in here and here and here, and then at the end of the month, you take your money back in there. Do you know what I mean? But so it is a lot of like to and froing. But once you get into the habit of it, like it works perfect. It works fine.
Is that when your cash flow sort of forecast comes into play because you sort of know what's going to get divvied out?
Yeah. My business is very different to like a plumbing heating business because I don't really have like the trade creditors which you guys have. You know, I don't have the merchant accounts. But ultimately, if you're if you're paying your merchant on your credit card, you get an extra couple of weeks grace before the money leaves your main bank account. So you transfer the money into an interest bearing bank account. So bring it to your bank and say, look, I want a bank which pays the best interest, but I want to have instant access to it. You don't want to be locked away for 30 days or 90 days on the money market. You want to have access to it. So you can basically just divvy about money to keep on transferring it back and forth. Yeah.
So if I'm with Starling Bank already for current account, they could probably offer that service, do you think?
You have to ask them. I don't think they will. Starling's a bit of a funny one because they offer the pots for free. If you're asking them for an interest-bearing bank account, they might. I don't know if they do it. I've not seen it in Starling, which is why I have like a love-hate relationship with them. I love the fact that clients are using it, but I don't like the fact that clients are putting money away, stashing it away, but they're not making no money off it. The bank is.
Yeah.
So that's my love-hate relationship with them. So same as Tide, same as all your other online banks. Yeah, they've got these good features, but you pay for them because you're not getting interest.
It's been good. I've only done the profit first for the last 6-7 months, but when it come to paying my tax bill recently, I just paid it and it wasn't a worry.
Yeah.
That was like the first time in 6 years.
Good.
It does help. But I have to play a bit what percentage it was and stuff, but it was just getting into the mindset. Every time payments came into my bank account for the card machine the previous day and what, so I would just divvying it all up.
Yeah.
And it was a good feeling.
Good.
You know.
Good. Like I said, it's not going to make you rich. It's just it's discipline. It's more like knowing that you've got your corporation tax bill saved as opposed to fuck, where's it going to come from? Like you can sleep at night knowing that you're saving as you go. You're not spending all your money. Yeah, you're not going out buying a 10 grand Mac. You know what I mean? It's that control. It's that discipline within business. Yeah.
Phil, you can get a brand new mic from Mike Shop for.
Tommy ordered a £2 grand
7
laptop on Monday, believe it or not.
700 quid, mate. You've ordered one, have you?
Well, I ordered a big fancy PC. I needed one anyway. My other one upstairs is blown up. That's why I'm on my phone. But
Yeah,
it was a perfect excuse to say I could get one.
He's done it. Oh,
I'll have
just
10 AIs living on it soon.
yeah.
I just got myself a new reconditioned MacBook, and the M1 chip. I got it for near enough £1,000, but it was more for music. Tommy and I dick about with music stuff, so I bought it for that. But yeah, I might be going down the Claude route with the Mac.
It's on M1 for music. Got one.
Yeah.
Fine. Mac Mini. I walked into Apple Store last January. Put it on tick. 12 months interest free.
Yeah.
Whatever, 55 quid, £70 a month. Okay. And a letter just came through the other day saying your finances is paid off. Okay. And that was M2, M3 Mac Mini. They're really powerful. And they run Claude.
Right, okay. Right. Maybe something to look at.
Happy days. Right. Sweet. Yeah, cheers for that. Yeah, I'll send you an email about the next one. Yeah, and I'll send the recording as well. Yeah, and I'll send the link to leave a review because I'll give that spreadsheet to everyone. Yeah.
Yep, great.
Okay.
Great, thank you.
Happy days.
Excellent,
Right.
good session.
Right.
Cheers, everyone.
It's
Thanks,
Cheers.
Darren.
Take it easy.
Bye.
Cheers, bye.
Aaron, I'm sticking on, buddy.
Yeah, it's cool to me. Yeah, Sam. Yeah.
Ian, speak soon,
Yeah.
mate.
Nice one. Good to see you guys. Enjoyed that session. Cheers, Ian.
No problem. See you soon, Ian.
Nice one. Cheers, mate.
Cheers, mate. Cheers. Bye. Bye.
How's you?
Yeah, good, mate. Good. Yeah, like I said, been going down a rabbit hole with Claude, but I fucking can't work it out. Like all these agents and bots and stuff and shit. But yeah, good. Mate, I'm still up for beers tomorrow. I think it might just be me and you.
I think my mate Rob's Rob's coming down, and I think Anne's around as well. So, if it's just a few of us having a game pool, then and cool.
Well,
Yeah,
even thinking about, Patrick was saying about next week, going to Manchester. Do I swap one night out and say we should go to Manchester? But I looked at the times; it's like 5:30 to 7:30. So, yeah, I'm a bit like, I don't know.
If I'm going, me personally, if I'm going on a night out of town, I want to go out and stay out and fuck it. If it's going to cost that much money, get on a plane and go somewhere.
Yeah. Okay.
Go somewhere nice.
Yeah.
I'm not really the type that's got a missus saying, "Oh, you're going out. You better be back at 4 a.m. Like, no, if I'm going out, I'm going fucking out, man.
You're having it.
Yeah.
Yeah. All right. Good. Yeah, I'm still up for it. I'm still out. Yeah. But I had a proper drink, Jack, there, Tommy, since fucking can't remember, mate.
Have you not had a drink in the last few days?
No, because this weekend I didn't do anything. Obviously I was with you Friday. And Saturday we didn't do nothing. No, literally I've not done nothing. No. Oh yeah, because I'll
Yeah.
see.
How's
Pregnant.
Bettina?
Yeah, it's good. Yeah, I've got another scan tomorrow. Yeah, so that'll be good. Yeah, I'll take all the measurements and stuff. Yeah, so
Another scan?
yeah. Well, we had a scan last week, but it was 10 weeks old, so we have to wait till it's 12 weeks for them to take proper measurements of the baby to make sure it's all healthy and what have you.
We found out whether we got a boy or a girl yet.
Right, we went to Chesterfield yesterday, and Bettina's had a blood test. So in 3 to 4 working days, we'll know. Yeah, we have to pay privately to get it done, but it's 99% accurate. Yeah, so ask me Tuesday, or I'll let you know Tuesday whether it's blue or pink. Yeah.
Okay, mate.
Exciting, really exciting. Yeah.
Right, what time are you free tomorrow?
I'm easy, mate. I'll probably have dinner with Bettina, or so I'm like 7, 8, literally. Yeah, I'm
7, yeah.
Yeah, all right. Oh, I'll make 7. Yeah.
Cool.
That's for me, mate. Oh, sound.
All right, well done on the session, mate.
Yeah, cheers. So what's your opinion on this? So I booked in Wayne months ago to do the 6th of March session, or whatever date it is.
Yeah.
Do I say to Wayne, look, I don't really think it's going to be worth his time. Like 5 or 6 people turning up.
Well, no, because he's going to use it, isn't he? Surely he's going to promote it to his group and, get a number of people that is his audience to come and listen to him
Yeah.
talk his part of the book. I think I think if it's booked in, I don't think you should necessarily say to him, "Oh yeah, do only like 4 people on last call."
The next session's on marketing and sales.
Is it?
Yeah, so that's the next chapter of the book.
But yeah, but if you've got him booked in, you've got him booked in, haven't you?
Yeah. But would you rather do it?
Well, let him do whatever
Yeah.
he was going to be covering.
I'll have a chat with him. I think we'll have a chat with him. Yeah. No, because obviously this just goes out to the initial to the cohort. It's not going out to the masses. Do you know what I mean? It's only the emails went out today went out to about 25 people. The people that started the first cohort. So it's not a case of it's going to go to Wayne's
Right.
masses or yeah. It's just that them 25 people only 5 turned up today.
Yeah.
Yeah.
I'm flexible, mate.
Yeah.
You know, if you've got him booked in, I mean, did you have the subject booked in with him on the whatever of March you're going to talk about? What did you say? You're going to talk about marketing, or are you going to talk about?
Well, when I booked in, I was just like, pick a date and you can do it. But it was very shoot from the hips, and it just turned out to be like, yeah.
Well, just ask him, because you know I know he's really big into on his 3 Bs.
Mm.
Yeah. Does that fit with the book? You know, I think I would argue that would imagine that I'm in a better place to say to people, look, this is really what you need to know about marketing your business and generating leads. I meant to be doing a post today. 904 registered leads so far going through the system. I'm estimating we'll hit 3,000 within 12 months.
So what, 904, what in a 12-month period, or in
Yeah. I was getting it set up for a post.
Okay.
I could wait to 1,000, but I really wanted to say to people, look, we're going to hit 1,000 in February. I'm going to hit 2,000 this summer. I'm going to hit 3,000 probably as we hit the new year. Do you want to be taking any of them 2,000 leads that I'm going to be generating? That's a bit.
Yeah.
It's not fucking vanilla shit. You know, this is it with a lot of people in marketing. You need to have a website, you need to do blogging, you need to do social media. Fuck off. That's just vanilla shit. Let's get to the point. How are we going to generate leads that are going to pay you a lot of money? One of them leads last week, I think it was the day before the session with Eten, Hilton had one lead that came through saying we run a church. It weren't a church. It was something that sounded like a church. Okay, so it didn't sound like it was Christian, right? And it didn't sound like they were Muslim, but it sounded like they were running some form of religious venues.
Yeah.
And he said, we've got 2 of them, and we need commercial heat pumps fitting. In any way you want to switch this, if that's a domestic installation, there's 30 grand.
Yeah.
If it's commercial, fucking who knows what it's worth. That's just one lead, mate.
Yeah.
One lead through understanding what it takes to actually, you know, build a website and get it ranking and get the conversions coming in. So yeah, we're on 902 of them now.
Nice.
Starting to do ads now. Yeah. I've been on call with Google today. I've been assigned someone from Google called Nicole.
Actually, from HQ or like
from well, she's got a load of cases, and I'm one of her cases for the next 6 months.
Sick.
Yeah. So add that into the equation with, you know, what what we've been doing with websites and SEO, and it's just like
Powerful, yeah.
it's going to be really, really good,
Yeah.
really, really good. So yeah, I'd prefer to talk about marketing, but it doesn't necessarily have to be March. You can stay on the track of money, for instance, stay on the track of other systemization, and I can come back and do marketing after.
No. We're going through the book. The next chapter in the book is marketing, and then the last chapter is going to cover off finance and then the closing. So we've only got two more left on this cohort. And Tommy, I'm not doing it again. It's I'm fucking exhausted.
Well, it's that attract, sell, keep then, really, because I wrote a big, massive section about attract, sell, keep in your book.
Yeah.
Like 5,000 words, I think I wrote.
Yeah, so you can cover that because that's in the marketing section. Yeah.
Okay.
All right, let me speak to Wayne boy. Yeah.
Maybe he'd fit towards the end of bringing in his balance idea, which Hey, go on. You said you're not going to do a cohort again.
No, fucking knackered. It's a lot of work. A lot of work. Yeah. Especially now I found this Udemy, all these things which I've been doing, I could just get like they have the dictation of what I'm saying, turn it into a Udemy mix by getting Canvas to do me the pictures to complement what I'm saying, and then I could have uploaded the course to Udemy and sold that for 11, 12 quid. But you get like hundreds of people buying them. So I've had a real since Etan's done his workshop, I've had a real like fucking hell, like I need to like I've just seen other things happening that can be automated. Yeah.
Well, that HN.
Yeah, exactly that. Yeah, that as well.
Now the thing is, he's going to use that when he focuses on it. He's got your avatar. You've given him permission to use a book.
Yeah.
He's going to use that. I don't know how he's going to use it, but your content and your avatar is going to be capable of producing that content.
Yeah.
I'm sure you could ask him, right?
I've
given you that. You give me the HN content, and then whack that on Udemy.
Yeah, I asked him for access to me.
Yeah, because your contract with him on that is they can train AR can use it to promote the academy. That's what it's about. Yeah. But the thing is, what you're talking about there is the vast majority of people don't even know that Train AR Academy exists. These are people all over the world. So you meet them where they are on Udemy and sell them cheap courses.
Yeah.
And just dilute it that it's not talking about it's not necessarily plumbers.
Yeah.
I don't think.
Yeah, I'll reword it to trades. Yeah, definitely. Yeah, it'll be more evergreen or more universal. Yeah, definitely.
Cool. I'll see you tomorrow then. Yeah.
I'm brother. Sound. See you a bit.
See you tomorrow. Bye.
Cheers, mate. Thanks, mate. Cheers. Bye. Bye.